Hi everyone, welcome back to Listen. 5 English phrases investment and trading professionals use at work. This is the language you hear in market updates, trading desks, investor calls, portfolio reviews, and general financial news. So if you work in investing or trading, banking or asset management, a financial advisory role, or you actively invest yourself, these 5 phrases are essential. They don't just help you understand the market, they help you sound credible and professional when you talk about it. The first one, bull market, bear market. 2 phrases you will hear all the time, bull market and bear market. A bull market is a period when prices are rising, investor confidence is strong. A bear market is the opposite. It's a period when prices are falling and confidence is negative. We say sentiment is negative. Now these phrases describe the overall market mood, not just one stock, bull markets and bear markets. So obviously, as an example, investors are optimistic as the market enters a bull phase. This means that prices are going up and people expect growth. Another example would be many funds are reducing risk during the bear market. Investors are being more cautious because prices are falling. So when people talk about being bullish, this means they are optimistic. They think prices are going up. That's bear markets and bull markets. Volatility is the next term. This refers to how much and how quickly prices change. High volatility, this is associated with big price movements, high risk. Low volatility is all about stable prices, lower risk. This word volatility is used constantly in risk analysis, market reports, trading strategies. You'll hear people say the market is experiencing high volatility this week. This means the prices are moving up and down very quickly. Another example for you, some investors avoid volatile assets. This means they prefer more stable investments. They avoid volatile assets. That's volatility. Portfolio, this is number 3. This is all about structure. A portfolio is a collection of investments that someone owns. This can be stocks or bonds, funds, real estate, or maybe crypto or commodities. You'll hear people say she has a diversified portfolio. This means her investments are spread across different assets, reducing risk. Another example, maybe someone will say or you will read, we need to rebalance the portfolio, which means we need to change the investment mix to manage risk or improve returns. Number 4, risk versus return. This is one of the most important ideas in investing. Risk versus return. Risk is the chance of losing money. Return, the potential gain. In investment English, these 2 ideas are always connected. As an example, higher returns usually come with higher risk. This means you can't expect big profits without accepting a level or some uncertainty. Another example of this, of using risk and return, maybe the strategy aims to balance risk and return. The company strategy aims to balance risk and return. That just means that the goal is reasonable growth without excessive danger. The company's strategy aims to balance risk and return. Then you'll hear people talk about entry points and exit strategies. This is phrase number 5. This is very common in trading. Entry point and exit strategy. An entry point is just the point when you buy an asset. And the exit strategy is when and how you plan to sell. Professional investors, by the way, they plan both, not just the entry. You'll hear people say, this price looks like a good entry point. That just means it's a good moment to buy. Another example could be, always define your exit strategy before investing. And that means decide when to sell, whether for profit or maybe to limit losses. So a quick recap on those 5 key phrases in investment and trading English: bull market, bear market, bull market, rising market, bear market, falling market. Volatility is how much prices change. Portfolio, that's your collection of investments. Risk versus return. Potential loss versus potential gain. Entry point, when to buy. Exit strategy, when to sell. Entry point, exit strategy. So these phrases will help you understand market conversations, speak confidently with investors and traders, and sound analytical, not emotional. As a final thought, investment English is not about guessing the market. It's about describing decisions clearly and logically. And when you can explain risk and strategy and market conditions in English, you're not just following the market, you are participating in it. And that's everything for today. Thank you for listening. This is Listen. Please share, subscribe, and I'll see you in the next episode. Until then, bye-bye for now.